The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is April 11th. It's Thursday again, and it's around 1:45. So normally we'll start the program around 1 o'clock. When it's really slow at the desk, what I normally do is open up the training room here and go over some of the things I have to present before I get into the program. So I'll take a few minutes to go over the disclaimers. That's the big thing I have to disclose before I start presenting. So that'll be on our agenda. That's number one. Number two, the next step will be to go over the trade setup. Okay, I'm just going to break it down. This is going to be the same setup that you're going to see inside the training room. The training room's open from 8:30 to 10:30. Mike is the moderator, and basically you're going to see him put trades on, manage them, and take them off. Now, sometimes it's a little quick, fast, and so it gets overwhelming, especially if you're brand new. If you're brand new to trading, it gets overwhelming. So over the years, there was a demand for someone to say, hey, can you slow things down? Can you walk us through it? And I raised my hand in the end. So every Thursday from 1 to 2 o'clock Chicago time, I break it down into slow motion. So we'll go over to trade setup. And then what we'll do is we'll go inside a live market and we'll shut down my email and we'll find some opportunities. Okay. The same setup that I go over are going to be the same set of rules when I go inside the live market. I'm going to make some observations in the next hour. Over the years, I have found a few traps that people kind of fall into along the way. So if they're spinning the wheels, losing money, or whatever the result is, I've been in contact with those people, and we kind of worked with them and tried to share some of my experience with being in the room every day for the last 8 to 10 years. So if you're brand new, this is going to be a great cheat sheet for you, a good syllabus to have on day one. Number two, if you are a returning CFRN member, hey, this is going to be a great opportunity for you to ask questions. If you are struggling, we can address those in the next hour. Again, I'm going to go over some of those traps that people fall into. So, hanging out for an hour might keep you out of those traps. And, the traps equate to losing dough. And so those are the kind of things I'm going to go over. Okay. I'm going to make some other observations throughout the course of the hour. Some things to look at. A big thing I'm going to hammer on is the easy and the obvious. Is the market trending? Trend lines, all that sort of things. Those things that that kind of hit me in the face, and based on my experiences over the year. I've been doing this for almost 25 years, so I've really seen the good, the bad, and the ugly when it comes to trading. So I do like I make sure that before I push a button, it's got to be easy and obvious. And that's something you're going to hear me talk about. Michael has grabbed onto that phrase a little bit, but that's kind of my point of view on trading. It's got to be easy and obvious. So that's the game plan for this afternoon. Again, feel free to ask questions, and let me get that box in front of me. In addition to that, my phones might be ringing. I'm going to hit the mute button, put you on hold, and then answer those telephones. So, I apologize in advance, but, I am trying to do a couple things at the same time while going over the setups, okay? So let's get started so we can try to get a full hour in of training in a live environment. But what I do have to do is go over the disclaimers, and I don't like to make light of it, because, like I said, I've been around the block, and I've really seen the good stuff and the bad stuff when it comes to this. And this disclaimer really is laid out there as a warning flag Basically, if you're brand new to trading, you should be aware of this, okay? Which is you can lose everything and some in your trading account if you're not losing stop losses. Some of the simple things, a stop loss. You don't have a trading plan. You're not in front of the markets. You may not be engaged in what's going on, the news items, those those simple things. If you're not aware of it, this disclaimer can hit you right smack dab in the face, and I've seen it. Okay. Not only that, the risk capital that you're putting into a trading account should be risk capital, capital that you can afford to lose. Nobody likes to lose money. I don't. But when if the worst of the worst happens, hey, it's not going to change your lifestyle if something crazy in the world happens. Or again, you're not following some of those same little variables, not using a stop, not having a trading plan, not being engaged in what's going on in the market, not paying attention to your trading account. So those are the kind of the easy and obvious things. Now, I know it's not probably a pretty way to start a webinar, but it is a reality. Okay. So again, I could just throw this thing up there, tell you, hey, take a look at it, and then throw it back under the blanket. It's just not worth it to me. So I will take a few minutes to talk about it. My experience over the years with CFRN, most of the guys that come down the CFRN pipe, they're numb to this disclaimer. They've been to this room, that room, this room, that room. They've followed this guy and this guru. They're kind of numb. They've been beaten up. Their accounts have been beaten up. So, if you've fallen into that path, I'm sorry you've gone that route, but that seems to be a common denominator. It happens to a lot of people. And look at that. Of course, my phone starts buzzing as soon as I start. So hold on. All right, so I'm back. Sorry about that. It took a little longer than I thought, but so that's disclaimer number one. All right, it's letting you know, hey, there are some risk involved in trading futures. It's a leverage game, so that's what that's all about. Okay. Um, let's just move forward. Okay, because I'd like to get into some live markets and talk about what's going on. All right. Second disclaimer is my relationship with CFRN. Okay, CFRN is, as it's outlined here, it's their indicators, their trading tools, they're the educator. Okay, what's my role in this? Well, CFRN Thursday, as I said earlier, I raised my hand and I said, hey, if guys need a slowed down version of what's going on in the training room as a way to open their eyes and keep it wide open while they're on the trial, hey, I'll do it. So, like I said, they're the educators, they're trading tools. Their indicators are built inside my platform. My platform is DT Pro. It's the same platform that Dwayne and Michael use. Okay, so this is it, DT Pro, with the CFRN indicators built inside of it. Okay, if you decide to take the trial, they're available on my platform or Ninja. If you come down the CFRN path and decide to go down DT Pro and use that, the benefit really is that you have me in your corner because I'm in the room every single day. I know the setup, I know the platform, and you have a live body to call and talk to if you have trouble. Okay. In fact, the phone that I just picked up, he's on the trial. He didn't know how to import some of the things. It took me 2 minutes. I got him up and running. So the big thing is you actually get to talk to somebody, a live body that actually knows the platform and the trading setup that you're actually learning. So that's a big plus. Okay. So their indicators are built inside the platform. If ultimately you decide, hey, I'm going to be a CFRN member, any money that exchanges is between you and them. Anything on their website, any of the videos, Thursday night workshops, the Passport of Logic 247, right? All that stuff, you would reach out to them directly. Okay. If it has something to do with DT Pro or about a setup or, hey, I'm on the trial. Can you give me some more information? That's all fair game. Okay. If the phone rings, it's going to be me that picks up. Okay. A lot of times if Michael is doing planes, trains, and automobiles and Dwayne's on the radio, people know they can just call me and get a hold of me. Okay. So just raise your hand and I'll be happy to answer any questions and be very transparent about it. Okay. So that is the second part of the disclaimer. Okay. My relationship with them. Okay. It started about 8 years ago. It was all radio. It was CFRN.net, all radio. And at one point, Dwayne and I ran into each other and said, hey, why don't you pop in on the radio program? We have a room full of people that have questions, that want some honesty and some transparency and some market commentary. So I said, sure, I've been doing this forever. Why not? And what I did notice is while I was in the room, a lot of guys were asking Dwayne, show me how to trade, show me your method, show me how to trade, show me your method. And ultimately, he got together with Mike. They are trade station developers. Our platform reads easy language. And so it was kind of perfect timing. And we offered a platform, and we still do, that's free. The only thing that you pay for is data. Okay. So it just happened to work out perfectly. Okay. So till this day, a lot of the indications that I use, and I'm more of a swing trader, use the CFR indicator set. Okay. And some of the rules and principles. So I know it pretty good. So, yeah, that's kind of the backdrop behind it. So, all right. So let's talk next about the trade setup. So that's my personal emails. You don't want to see that. or maybe you do. The setup. Okay, if you're brand new, if you're on the trial, this is going to be your syllabus. Okay, so I'm going to go over the setup, some of the buzzwords, and things that you're going to look for while in the training room. Okay, so here we go. Number one is the time frame. Okay, we're on a 4-tick range chart. Okay, so generally speaking, just about the majority of people are on a time-based chart. Hourly is popular, 5-minute, a daily, but the idea really is to get it down to a 4-tick range chart. So see how it's highlighted here, daily, on the upper left-hand corner of your chart? There's a little drop-down box here. Left-click on it and go down to custom. This box will open up and you're looking for range bar. You make that one look like a 4 and hit OK. This is the ES chart right now in real time on a 4-tick range. Okay. The height of each candle is 4 ticks in height. Okay. Now that plays a role in what Michael's doing in the morning, because knowing the height of each candle, he can be proactive in placing his orders ahead of time. Okay, I'll go over that in a little bit, but when you start hearing him call out the highs and lows of the candles, he's getting ready to place an order in advance. Okay, and he can do that because the 4-tick range allows him to be a little bit predictive. Okay, if he knows the height of each candle, if the market goes down or up, he can actually place orders in advance. Okay, so we'll go over that if it sets up. But the idea of this is to get on the correct time frame, which is a 4-tick range. The first trap that people fall into is they go to custom and they select tick bar. And they make that 2 and they turn it into a 4, and then the chart looks, it doesn't look good at all. This is the first trap you fell into. So the idea is to get it to custom and get it to a range bar. Okay. If you are a diehard mini Dow trader, NASDAQ, or mini Russell, on a 4-tick range, it's moving fast. Okay, it's almost untradeable on a 4-tick range. We have, with those products, go to an 8-tick range. We're slowing it down. Okay, the setup is still the same. The rules that I'm going to go over are absolutely the same. The only thing that has changed when you're going on an 8-tick range, instead of using an 8-tick stop, you're going to use a 16-tick stop loss. Okay, you're just doubling your risk. Okay, so again, in the room for training purposes, you're going to be on a 4-tick range. If you're really excited about the YM and the mini NASDAQ and the Russell, I'm going to suggest slow it down and go down to an 8-tick range. Okay, so 4-tick range is the time frame. So that's where we're at. All right, we're going to work on the top portion of the chart. Now, let's start with this. The red and blue line here is referred to as the MA1. Okay. The green line here is referred to as the BBC. That is short for bullish bearish cross. Okay. And that leads us into step number 1, which is this. When the MA1 crosses the BBC, that is step number 1. That's the bullish or bearish cross. But more importantly, you're looking for the color of the MA1 as it crosses the BBC. So for example, if the MA1 is red and crossing the BBC, you're looking for selling opportunities. If the MA1 is blue, then you're looking for bullish opportunities. Okay, the one that's highlighted here is a bearish cross. Okay, that means we're looking for selling opportunities. Okay, so now I want you to think about color. Red means sell, buy means, blue means buy. Okay, again, the one that's highlighted is red. That's a bearish cross, so we're going to look for selling opportunities. Okay, now Notice I didn't say go short, go long, go short. So we're looking for selling opportunities, okay? And that leads us into step number 2, okay? Which is this. After the cross, and we noted that this is a bearish cross, right? The normal thing for the market to do is to gravitate toward the BBC or that green line as it does here. Okay, that's normal. So we are looking for the normal thing, which is a pullback to the BBC, which it does here, but one step further where it closes in the direction of the trend. We defined the trend as being bearish back here because what color was the MA1? It was red. So then we should be looking for a red candle or a down close. Okay, that sets step number 2 in motion, the down close. Okay, that's normal. Now, in some cases, if the market has so much bullish or bearish momentum, it won't get to the BBC. And there's some rules that have to go into effect when that does happen. So one sec. My phone's buzzing again. All right, so I'm back. So we're at step 2. Okay, so we had the bearish cross here. The normal thing for the market to do is to pull back to the BBC. The market indeed has done that, but then we're looking for a close in the direction of the trend. One of the popular questions I always get is, well, why don't you just place an order to sell it right there? Okay, no, you're sacrificing price for action at the BBC because sometimes you just get a market that just goes like this. Okay, so no, we're looking for a close in the direction of the trend because maybe that's that one little variable that lights the match for lower prices in this example. Okay, so step number 1 and 2 have been highlighted. Okay, so now we're going to look at the bottom portion of the chart or the oscillator, which is defined as the slingshot, and you'll get to know why they labeled it the slingshot. Okay, so here's step 3. So once number 1 and number 2 are in motion, your eyes are going to gravitate toward the slingshot. Okay, so some buzzwords here. The red and blue line is referred to as the cycle. Okay, the green line, nothing fancy about it, it's just the green line. But here's what the slingshot is telling you. Okay, here's what it's saying. On the 4-tick range chart, in this particular market, the fact that the cycle is red, which is good for the home team because we had a red MA1, and we had a red candle or a bearish close, guess what? You'd want, ideally, to put all the probabilities in your favor, you'll want a red cycle. And what this is saying is, hey, the momentum is bearish. Okay? Okay? The momentum is bearish in the 4-tick range. This price action here, associated with the green line pulling away like a slingshot, right? It's pulling it away from the cycle. This is the direction. It's saying, look, this is possibly just an air pocket in this ongoing downtrend that we've defined. Okay? And with the close against the BBC, which is normal, right? And the green line pulling away, okay? There's nothing left to do but really to get short, okay? We would get short right here on the close of this candle, okay? Because what we expect to happen is this green line to pull away and ultimately come down and fill the gap or touch the cycle as it does here, okay? That's normal on the slingshot, all right? Price action wise, associated with the green line, we expect the price to make a new pivot low. Okay? So as the green line is pulling away, price should pull away. And as the green line starts heading toward the cycle, we expect the market to make a new pivot low. And when they touch, this is the place where we get flat or take our dough and get the heck out of Dodge. Okay? Why? Well, because we expect the green line to do what? Pull away from the cycle. And pull away from the cycle. Pull away from the cycle until, guess what? The cycle turns color. Now it's blue. So now the momentum's changed, and now we're looking for bullish opportunities, right? And then we're looking for the green line to get below it, creating bullish divergence, okay? So like a slingshot, it's being pulled away, pulled away, pulled away, okay? And along the way, you're going to sell that top, sell that top, sell that top, or start buying these bottoms. Okay? That's the game plan. So the trade really exists in the slingshot here. Okay? That's where it exists. Okay? So when Michael talks about separation or divergence, he's talking about step number 3. Okay? What he's saying, hey, momentum's bearish. The green line's pulling the way. That's the slingshot. That's the separation that's highlighted here. And the price associated with this, okay, sets up step 3 in motion. The only thing, and the biggest thing, before we push any buttons, is that the market needs to be trending. It needs to be making lower lows. If it's a bullish setup like we're seeing here, we better be making higher highs. Okay? So if there's something that you write down on a piece of paper this afternoon, number 1, and one of the disqualifiers, okay, if a market is trading sideways, we're not going to push any buttons whatsoever. It doesn't matter what's happening in front of you. If we are trading sideways, okay, we're just going back and forth, there's no trade. Okay, we have to be making lower lows or higher highs. Okay, easier said. Okay, when we really get into the markets, it gets a little confusing. So I'm gonna teach you some things to kind of identify whether a market's trending or not. Okay, so those are the steps, and as outlined here, every trade has an 8-tick stop attached to it. So if we're trading the gold with the crude, you're risking $80 a contract if you're dead wrong. Okay, I'm sure you guys get the same kind of emails that I do. So you're risking $80. Okay, if you're trading the mini Dow, it's closer to 40 or $40. If it's the S&P or the soybeans, it's closer to $100. Okay, So that's what you're risking every time you enter the market. In the end, okay, I'm brand new. You just told me about the setup. What am I signing up for? You're basically signing up to scalp, right? Because you're on a 4-tick range chart and you're looking at the market under a microscope, right? We're going to be trading for ticks. So there might be a lot of trades you're going to end up doing, okay? You're not going to learn to pick the top here, and you're not going to learn to pick the bottom here, and you're not going to learn to trade it from point A to point Z. You're going to learn to take a piece out of the middle. By the way, there's some aggressive risk management rules. So once you get into the trade, you're going to trail the stop, trail the stop, trail the stop, trail the stop until you get stopped out, or that green line ultimately gets into the cycle and you just close the trade out. Okay? So not only are you going to have some discipline, you're going to have to be following some rules, right? But you're also going to be in front of a platform, okay? And you're going to have to learn the platform, okay? So there's a learning curve. The guys that have been around a platform, they have an edge because they've been around it. They know how to push the button. They know how to, their eyes are a little bit trained down to look at a chart, then look at a DOM. By the way, this tower here, that's called the depth of market, which is highlighted up here. This is where we're doing our buying and selling. This is where we're placing our orders. If we have an indication that the market's going up, we're going to click in the green. If we have an indication that the market's going to go down, we're going to click in the red. Okay, it's pretty simple. If we click in the green and the market goes up, we make dough. If we click in the red and the market goes down, we're going to make dough. Okay, so this is where we'll do all of our buying and selling. Okay, so it does take practice. The good thing is, CFRN's going to preach. You should be practicing. You should be in a simulator. Yes, I know it's not real money. It's not the same. I agree with that. But the mechanics of execution and learning what's happening here and then pushing a button over here, that takes some practice. Okay? So, that's a scoop. That's what you're signing up for. Okay? So, with that said, you know what? Let me get in. Let me move the demo over. And let me move live over here. So I can play around and not. Okay. All right. So I got it situated. All right. So as I said, the first order of business, 4-tick range chart, right? All right. So let's start with the crude oil. All right. So I'm looking at crude on a 4-tick range. Okay. So the first thing, number one on our piece of paper says, is the market trending? Okay. One habit I would suggest you get in rhythm of doing as soon as you click on a chart is hit the zoom out button. Okay. This will allow you to see what's going on over here, over to the left, right? Sometimes when you're in the room, you're going to see this. Okay. You're looking at Michael's charts and it's blown up pretty good. So something that might look like it's trending here, if you take 3 or 4 clicks out, might suggest we're not. Maybe it suggests we're trading sideways. Maybe we're finding some resistance back here, 3 or 4 hours ago. Okay, which is the case here. Okay, so I would get in the habit of hitting the zoom out button. Okay, so for the moment, what I see is a market that is making some higher highs. Okay, we had a double top here. We're starting to make some higher highs. All right. There is a little bit of resistance here. Okay. Prior over here. Okay. So I'm not surprised to see the market do the normal thing, which is pull back to the BBC, which is that green line. Okay. Right now, The crude's doing nothing, okay? So we can take this off the table for now. Natural gas. All right. As I said before, two scenarios are going to happen, okay, after the cross, okay? The cross is step number one, which is when the MA1 crosses the BBC, and it does it right here. That MA1 is crossing the BBC, so we're looking for opportunities to get short. And what is the normal thing for the market to do is to gravitate toward the BBC. The BBC is this green line, right? And as I said earlier, sometimes we'll run into a situation where the market has so much momentum, whether it's to the upside or to the downside, it won't get to the BBC. All right. So here's another thing or another habit you want to get into. Okay. As soon as you get the cross, whether it's a bullish or bearish cross, what I want you to do is engage the trend line. And the trend line is right here. Okay. Left click on it. Okay. Your mouse, your arrow now has turned into a pair of crosshairs. Okay. And the reason you're going to do that, okay, there's two reasons, but the biggest one for the moment is you're going to get in the habit of drawing the trend line as the market starts gravitating toward that BBC, because you never know if it's going to get here, right? Like this example, you never know if it's going to get there. Okay? Here it does. Here it doesn't. Right now, here it doesn't. Okay? So, just from price action, that's a shorting opportunity. That's a shorting opportunity. Right here is a potential shorting opportunities. Okay? So I want you to get in the habit of drawing a trend line. You're going to see Michael do it all morning. So you might as well get in the habit of doing that. And if you get in the habit of engaging the trend line after the cross, okay, if you get in the habit of drawing it in advance, okay, if this happens where we close under the trend line and we do have that bearish separation, it's just going to be automatic for you just to go inside the DOM and left click and take action instead of fumbling with the trend line, trying to draw it, and then get into the DOM. Okay? When you start fumbling things, that's it. The trade's over. Okay? So again, two things off the bat. Number one, identify if we're trending or not. Okay? Number two, to help you, okay, define whether a market's trending, get in the habit of hitting the zoom out button. Notice when I do that, we're making lower lows. Okay? This one's an easy and obvious one. It's making lower lows. Okay? But take it a step further. Once you see the cross, whether it's a bullish or bearish cross, engage the trend line. Okay? We do that because we never know it's going to get to the BBC. The other reason why we do that, okay, when doing this, as I said earlier, ideal, we want everything to be the same color. So if we have a bearish cross here, we want a red cycle. Okay, that stacks everything in our corner. Okay, there's going to be examples where the market's starting to go up to the BBC, gravitate toward the green line, right? And then all of a sudden, our cycle turns a different color on us, right? If you're brand new, this is going to happen, okay? If the cycle turns color on you, this trend line is required before you can take action. So you just might as well get in the habit of engaging the trend line and drawing, because if this does happen, again, the trend line's already drawn in advance. You're not drawing it after the fact. You're not fumbling the ball, but you're in a position where you can just go inside the DOM and take action. As long as the cycle, if it turns color on you, and as long as it's flat, that's fair game. That is a short, given this scenario. Notice how the green line has pulled away. We have that separation, right? We talked about the separation back in the diagram here, right? The green line is pulling away. Well, the green line is pulling away here. The only thing that's changed is that this is the color blue. It's flat. Okay? That's okay. Here's what's not okay. The market's trending toward the BBC. We draw our trend line. Why? Because that's what we were told to do. Okay? That's what Bert said in that webinar on Thursday. We have the down close. Okay. What color is the cycle? It's blue. Okay. So I know a few things with this. Number one, it's not red. It's a different color. So now that is watering down the probabilities. Okay. Number two, it's blue. So a close below the trend line is required before you take any action. Okay. The color is a different color. A trend line is required, and a close below the trend line is required. All right. Now here's the only change. It's not flat. It doesn't look like this, right? It's kind of like got a little hook to it and it's starting to curl up. Okay. If you're faced with the blue BBC or a different colored BBC, remember we thought this is good, right? Everything's the same color. When it's turning blue, a different color, and starting to curl up at a 45-degree angle, no trade. That is the second disqualifier and one of the biggest traps that people fall into. Okay? What they do is they end up doing everything correctly. They draw the trend line. They get the close. They go inside the DOM and they left click. Okay? They get short right here. Okay? This is telling you, hey, the market might be giving you a bigger retracement here as it's curling up. Okay? So don't. But you might say, hey, but that doesn't look like 45 degrees. That looks more like 30 or 25. You're looking for excuses to trade. That's what you're doing. Okay? It's got to be easy and obvious. This is easy and obvious. Everything the same color, right? Okay? This is watering down the probabilities, but looks a lot better than what I'm looking at right here. Right? So if it's not easy and obvious, or even if you have to ask yourself those silly questions, hey, it's more like 30 or 25 degrees, then don't take it. You're on a 4-tick range. Okay, there's going to be plenty of opportunities, and you got, 30 different markets you can, sink your teeth in. Okay? So again, to labor over the point, get in the habit of drawing a trend line. Okay, we do that for two reasons. We don't know if it'll get to the green line. Okay? Number two, it's required if the cycle turns color on us. And if it's flat, that's okay. If it turns up against us, that's not okay. And look at the price action now. Okay, it's giving you grief if you are short, and you just avoided a stop loss if you took that into consideration. Okay? And again, that's one of the big traps people fall into. The two biggest ones, and I already highlight trending, they get caught in a sideways market, or the cycle turning a different color on them. Okay, and when it does, it hooks up on them. So, but it was trending, right? We were making lower lows. All right, we covered a lot there. Okay, so let's go fishing. Let's try the gold. The gold's down almost $20 today. So, looking at gold in June, and notice the first thing I do is zoom out. That's the habit you should get into. Okay, are we making lower lows? Yes. Okay. However, right now we're consolidating. Okay. Step number one is in motion here. The MA1 is blue and crossing the BBC. Okay. What do we do after the cross? Engage the trend line. Why do we do that? Because we never know if the market is going to get to the BBC. What is the normal thing for the market to do? Gravitate toward the BBC as it's doing right now. okay? We draw the trend line. We get in the habit of doing that because we never know in real time if we're going to get here. So we have step number 2, right? It hasn't closed yet, but we do have step number 2. Step number 3. What color is the cycle? We want it to be blue. It is blue. The green line is pulling away, so we do have space. We have step 3, or separation. Okay? What you're looking for here is an up close. All right? All right. Here's what Michael would do. Here's what he's going to say. If the low is 1294.10, then the high needs to be 1294.50. That's what you're going to hear him say. Okay? 1294.50 would put the market here. That would be an up close. So what he would end up doing, he would go inside the DOM and right click. He's buying it on a stop at 1294.60. That is what he's doing. So in the room, as step 1 happens and step 2 happens and step 3 is in motion, he might start calling out some highs and lows. We know the height of each candle should be 4 ticks in height, right? So if the low is 1294.10, add 4 to that. Okay, that puts you at 1294.50. Okay, your order should be plus or minus 5 ticks from then the current high or low. 1294.60. Okay, so the current market is here. Okay, he's waiting for the market to break out before he gets long. Okay, that's what he's doing. Okay, so let me cancel that order. There we go. Okay, so 2 ways to really get into the market. Number 1, you wait for the up close and you left click. You create a limit order in. Okay, you wait for it qualifies and then you left click. The second way to do it is as I just described earlier, like Michael. Okay, it's basically level 2 as you are in the room a little bit. Okay, which is, you know, the height of each candle. If you just add plus or minus 5 to then the high or low, then you can be proactive and place the order ahead of time. Okay, you're buying it on a stop. Or if it's a bearish setup, you might be selling it on a stop. So why would he do that? Over the course of the trial, what you're going to see is markets take off, all right, or break down. And you're going to say, Michael, how the heck did you get into that trade? That thing just took off. You had no chance of getting in there. Okay, you're screwing around. The way you could take advantage of it is placing the order in advance, buying it on a stop, or selling it on a stop. Because if the market does take off, he's going to go with it. If the market breaks down, he's going to go down with it and benefit from it. Okay, so that's why he does it. All right, so you're going to see that happen in the room. So I'm going to bring it to your attention. All right, now, real time. Okay, are we going to be a buyer of this? What I see is a market actually that's trending lower. So no, we do have a setup here that meets all the criteria, but we're in a downtrend. All right, gold is down 20 bucks. I'm not going to be a buyer here. Okay, so if I'm not going to be a buyer, I don't think you should either. Okay, so I would take this trade. I would not take it. Trade's off the table. Okay, we're looking for markets to make higher highs or lower lows. Yes, it has. Get rid of Kara here. Okay, but we're in a downtrend. All right, so my advice: stay away from it. Okay. All right, let's go back to crude. I gravitate toward crude because it moves. And notice the first thing I do when I look at a chart, I zoom out, right? Notice the double top. This one kind of hits you right smack dab in the face. So if we're going to get bullish crude in any form or fashion, it's going to have to get above this level. okay, before we can get long. We do have the bullish cross here, right? The MA1 is blue crossing the BBC, but we're sideways, okay? All right, let's try the indices. Let's see what's going on over there. All right. Zoom out, zoom out. Okay. Prior low over here. Prior low over here. Okay. Here's that trend line after the cross, right? Here's the trend line. Okay. Old low here. We have a double bottom in place. So you might get excited looking at this chart and saying, hey, there was an opportunity here. No, there wasn't. There was an old low here. He had a double bottom in place. So for the moment, after the fact, no, I wouldn't have taken this trade. There was support here, and we bounced pretty good off of that level. I'm looking at the Russell. What the heck am I doing? Hold on. Go figure. Stand by for a correction. All right, ES. All right. Notice the first thing I do, zoom out. Okay, we're not trending. Okay, we have support here. We had support over here and over here. We're basically all we're doing is creating one big box, right? That's what we're doing here. So this is the trap that people will fall into, okay? They get caught in the, hey, I'm looking at it from this standpoint, okay? But if they take a few minutes to zoom out, they're going to see bigger picture. Maybe we're just congesting. Let me tell Clark I'll call him back 1 sec. All right, he might call back. But we're trading sideways, okay? And if you're not sure about that, okay, dynamic support and resistance will also help you out. If they're side by side like this, okay, look at that. We're sideways, all right? Make sure it's easy and obvious, okay? If you're unsure, don't push any buttons. So from the short standpoint, if we start trading underneath here, spend some time underneath here, I'm not talking, let me point this out now that I've kind of scratched the surface on that. Be careful. Old support here, you look at this and go, hey, we made a new low. Okay. Notice how we recovered the low right away. Okay. Be careful of that. Dynamic support is printing. Okay. It's printing for a reason. We might have broken it. We might have poked our head underneath it, but we rekindled it right away. Okay. I would rather have you sacrifice a little bit more time and action underneath this low before I would get excited about getting short. Okay. If I'm looking at it from this standpoint. Okay. Not the, hey, I'm going to poke my head underneath it and then right back up. Okay. I don't know how other way to explain that. Okay. We want it to spend some time underneath support or resistance, not just poke its head above it. Okay. If it happens in the next 30 minutes, I'll make a point to talk about it. Okay. But for the moment, okay, we're taking ES off the table. It's not surprising because we're really wound up a little tight here. Okay. This happened back at 10:45 this morning. Okay. There's nothing here. Okay. Let's go to the currencies. Let's go to the euro currency. Okay. Here's my point. Okay. So first of all, we're going to be looking at something like this, right? Let's go over the easy and obvious stuff. Bearish cross. The MA1 is red and we're looking for any selling opportunities, right? The next thing we do, gauge our trend line. Why do we do that? Because we never know if it will get back to the BBC. It closes below right here. Cycle's red. Green line's pulling away. Okay. Zoom out, zoom out. I don't know. We're real close to support, in my opinion. Cannabis profits daily. Get on it. All right. Like I said, if you get in the habit of zooming left, this might keep you out of this trade. Okay. So again, that's why you draw the trend line, because you never know if it'll get back to the BBC. Actually, it does here, right? It ultimately did what the normal thing was for it to do, was to pull back to the BBC. Okay. Okay. So there was a few examples. Here's another one. Pulls back to the BBC, right? Notice the blue line. It's blue, different color. That's watering down the probabilities, but this is a disqualifier because it's at a 45-degree angle. But Bird, it went down. Yeah, it did. You're going to run into that. It's happening here again. Notice how the cycle is blue at a 45-degree angle. Right now, I wouldn't touch it, okay? Because that's telling you, hey, we might be actually heading up. So what we might end up doing is just consolidating and then heading up, okay? Notice here, at the time we get the down close, which is that candle here, the black step line, is into the BBC. That's disqualifier number 3. Okay. Disqualifier number 2 is the cycle is a different color, right? And pointing up at a 45-degree angle. It's going up against us. Okay, the first disqualifier, right, is sideways. Okay. Sideways. Market sideways, that's your other disqualifier. Okay. All right, so for the moment, the euro's off the table. Okay. British pound. Here's a normal thing. Pull back to the BBC. Were we trending? Yes, we were making lower lows. Okay. This was the down close. The cycle was blue. This is a flat cycle close to the midpoint. I would have probably reserved, I probably wouldn't have taken that, to be honest with you. Okay. The other thing to talk about here is slope of the cycle. Not only would you like it to be the same color, okay, slope is important. Okay. Flat down below or above, okay. But when it's flat and toward the midpoint, I would use some caution there. Okay. Easy and obvious is the game plan. British pound's off the table for now. Swiss franc. Okay. Zoom out. We were congesting here, right? Finally broke the trend. We had the pullback. Okay. Here was the first down close. The black step line's in it. Not only that, the cycle is blue and pointing up. Usually when this is wrong, you'll get a black step line that pierces the BBC. Canadian is sideways. Okay, notice how we're back and forth here. Mexican peso, a double top. Okay, we get the bullish cross here. We get the pullback to the BBC. Okay, black step lines into the BBC, disqualifying the trade. Not unusual that's happening because we have a double top. Okay, so we just went through the currencies. Let's see what our natural gas is doing. Nope, nothing there. Okay. Nothing's going on here. There's no separation, and we're not trending. All right, so let's find something. I'm going to try to find something that we can trade so I can put something in the DOM. All right, here is the YM. Okay. Zoom out, zoom out. We have resistance here. You wouldn't see that if you're looking at that. Zoom out. Hey, we rejected that price pretty hard. You might think twice about buying this pullback. All right. But here's what I'm going to do. And I don't want anybody to touch the Dom. All right, Mark. See you, bud. Okay. Engage the trend line. This is how your trend line should be drawn. Okay. Normal thing for the market to do is pull back to the green line, right? So that's what we're waiting for. This is not good for the home team, right? This waters down the probability because it's turned red on us. It's a different color. We want blue because we have a blue MA1. Okay? But we're looking for a bullish opportunity. Let me tell David to call back. David, call me back. I got another 15, 20 minutes in the webinar. Okay. So now what we're looking for is in the up close, okay, above this trend line, okay? So if the low, here's Michael again, if the low is 91, if we add 4, the high should be 95, right? Put your order in, you would right click at 96. So if the market blasts off from here, it's going to enter me in on a stop. So that's Michael being proactive, okay? 26096 puts the market right about here. That's clearly above this trend line that I've drawn. Okay. I took the low and added 5. I took the low and added 5. Okay. That's the magic equation that you're going to use going forward if you want to be like Michael and be proactive. It made a lower low. Cancel the order. If the low is 89, add 5 to that. The high would be 94. It would put it here. That's your new order. 94 would be a bullish close and put it above the downtrend line we just drew. Okay. This is no good. Okay. But I'm doing this to see if we, okay. So that's the up close. So hold on. Now I got long just to give you an example how to do this. So we're long the market. Okay. Now notice what I did. I did incorrectly. Sorry about that. Okay. Is I created a bracket order. It's already set, so it is what it is. Okay. I created a bracket. So as soon as I got in, it automatically put a stop loss behind it. So this Tinker Toy triangle here, okay, notice how I left click on it, closes it, left click, it opens it up. And we have a function down here called sell stop and buy stop. If you check those, check mark, and then you do a right click over buy stop and go factor in ticks, and right click over the word sell stop, factor in ticks, and make that an 8, that'll automatically put a stop loss on your trade as soon as you get into the market. So when I got in, it automatically put a stop loss behind it. So that's one less trade or one less click of the mouse you have to do. Okay. Now, not surprising, we're getting grief on this, right? 2 reasons. Number 1, we identified this was resistance back here. Okay. And number 2, what was the other big thing? Cycle was turning red, right? And it was starting to curl over. Okay. So we got a little bit of grief on it. All right. How do I move the stop up? You're going to see Michael do this a lot. Here's our stop loss. Okay. The way to trail it or move it, here it is. You just left click over the 1, drag, release. Drag, release. That's all you have to do. Okay. And if you want to put an automatic target in, okay, Nathaniel's asking the question, you would check sell limit, and you'd also select buy limit. Same thing, right click over sell limit, factor in ticks. You decide how you want to, what you want to put in here. Okay, if it's 15, put 15 in, whatever the deal is. Make sure the factor is in ticks. You want a common denominator, okay? Everything is in ticks. So put 15 in there, okay? Whatever the number is, that's the factor you put in there, all right? So what will happen is, as soon as you get into the trade, not only will it put a stop loss in, but then you'll see a number 1 up here. Okay, watch. Okay, it put a stop in, but now it also put the target in at the same time. And they both can be adjusted. Left click, drag, release. Stop loss, drag, release. So you can do both. Okay, so we're long right here. We got a target in here and we have a stop here. Okay, that's the trade. Okay, if this gets filled, this will cancel this order. If this gets filled, it will cancel that order. It's called an OCO. Okay, you'll see that. Here's one thing you guys should get. You should have this up. Trading, position and order management, working orders. Okay, these are the orders that you have working. Okay, they're outstanding orders. Okay, watch and notice how it's an OCO. So watch what happens when I get rid of the trade. If you want to get out of a trade quickly, exit at market and cancel. Okay, notice how that disappears. So when you get out of a trade, the reason why you should have this up, you shouldn't have any tickets in here. If you do, you have something, you have a loose end. Okay, you need to have this open. Okay, okay, so have that open. So I'm going to shut it down there. All right, so I hope that highlights how to get into the trade, how to trail the stop, kind of little special features that the DOM has. But again, that wasn't the right set. That wasn't easy and obvious. That's what we're looking for. And you notice how the market's just doing what it's doing is because the cycle turned red on us. All right, I switched to the S&P. We better start making some lower lows. Anything left in the 6J? Let's go look at the Japanese yen. Perfect. Let's do it. Okay, first thing, Japanese yen. Are we making lower lows? That one's pretty easy and obvious, right? Gauge the trend line. If you're going to draw the trend line, if you have two bodies like this, draw them off the corner of the bodies. Okay? If it's a body and you have a few wicks involved, it should be at the bottom of the wick. Okay? This is how your trend line should be drawn. Okay? Do we have a red cycle? Yes, we do. Okay? So what this implies is two things. Either the market's going to do the normal thing and gravitate toward the BBC, or it's got so much bearish momentum, it's actually going to close under the trend line and fall. Okay? But we're in a position now that if that happens, we could take advantage of it. Okay? Now, if we get the close below the uptrend, and this is an uptrend, right? Uptrend line, this is going to be defined as a momentum trade, right? So those guys that are CFRN members know what that is. And there's a set of rules that's evolved. I'm not even going to talk about it. Okay? But Nathaniel, I think that's a valid setup if it qualifies. I can't talk you out of it. It's got everything, got all the variables. Okay? Let me take a look around. Again, that was the earlier gold trade we avoided. Okay, it didn't even qualify anyways, but we're stuck in a range. Let me go look at the energies. Stuck in a range. natural gas. Okay, there's nothing going on here. Euro, kind of stuck too. And that crazy Dow that we were just screwing around with is kind of stuck in a range. So that being said, we're kind of stuck sideways here in a lot of the markets. So we'll call it quits while we're here, okay? So again, the highlights I would take away from this: number one, get in the habit of zooming out to identify a trend, okay? Sometimes you get caught up in looking at the chart, in zoom in motion, okay? If you take a few minutes to zoom out, you might find whether or not we're trending. We ran into that in the Dow, right? This looks bullish. That says, oh, I better be careful. All right. So get in the habit of zooming out. The other thing too is get in the habit of, after the cross, which is step number one, engaging the trend line and drawing trend lines. That's what I would also do. Get in the habit of drawing trend lines. Okay. The reason why you do that, two reasons. The normal thing for the market to do, gravitate toward the green line with the BBC, or if it doesn't, you're in a position already to take advantage of it, and you can just pop in the DOM and push a button. All right, so that's one way you can be a little bit proactive. Okay, so if you're brand new, this is going to be a good syllabus for you to lean on. It's sort of a cheat sheet. The idea is to give you more of an eyes wide open approach while you're on the trial. I'm featuring our platform, DT Pro. No, there isn't, Nathaniel. That's funny though. So we're, that's the whole idea. We're kind of slowing it down so you guys can absorb what's going on if you're brand new. And if you're a returning CFRN member, again, the idea was to open your eyes to some of maybe the traps that other people are falling into, answer any questions you had, and give you more screen time and get to know the personnel of the markets that we're trading. Okay? So that's it. I record all of them. Has to be decoded. Usually I put it onto YouTube the following morning. Okay? So I will see you guys. I will see you guys in the morning.